Hi guys, and welcome back to my channel, Life's Daily Dose with DG. In this video, I am going to be going over the Schedule C form from 2020 that is needed for all of you first-time PPP borrowers who have a business that just started in 2020. Okay? So if you're a business owner and you did not have a business filed on your 2019 tax returns, but you still want to qualify for PPP, as long as your business was operational before February 15th of 2020, you still qualify. But do me a favor really quick. Please subscribe and like my channel. I will be giving straight, no chaser, no filter videos on this PPP situation where you can go to apply. Was in my first video. I actually gave you the name of the credit union that's live right now. They actually have processed numerous applications for my tax clients. So please go ahead and subscribe, leave me messages below and I will respond, as well as head over to my website, pirexaccounting.com. That's PIREX accounting.com. It'll be in the description below as well. So let's dive right into this. So bear with me here. I'm not a YouTuber, but I want to give out this real free good information to everyone out there. So let's say you say, hey, I did not have a business in 2019, but I had a business January 1st through February 15th of 2020. How can I apply? This document is a Schedule C, and this is what you're going to need. And we're going to walk through this on how to fill it out. And again, message me if you have any additional questions. You're going to put your name here where it says name of proprietor, that's you. You're going to put your social security number, a name of the business. Now, understand that the name does not have to be registered. You can have a business and just still use your social as a sole proprietor and just use your business as a DBA. So just name your business here, even if you did not incorporate your business with LLC or incorporation papers as a sole proprietor and get an EIN number. You can still use a business name here. Now, with that being said, if you did happen to incorporate your LLC or sole proprietorship and received an EIN number, then put that business name here exactly as it appears on your IRS EIN form. Okay? And it's also going to ask you where it says principal, business, or profession, because your business name goes here on line C. But business A says business principal or profession. And what that means is, what does your business operate as? You can find the description for this for box B and box A, and something called an NAICS code. So you go look up what is the code for your business. All you have to do is type it in Google. If you type in NAICS code for barbershops or beauty salon, it will come up for you. Uber driver, you just Google what that code is and it will come up. Again, that's your NAICS code, and if you just Google NAICS for lawn care, it will come up and you will put that code in box B. And then whatever the description is for the NAICS code, you will put that in line A. Okay, so business name goes on line C. If you don't have an EIN, leave it blank. Do not put your social here. So if your business didn't have an EIN, that's totally fine. You can use just your social, just leave it blank. Moving on to line E. So you put your business address. If that is the same as your home address, that is perfectly fine. You just list it here as you can work from your house with your business. Choose an accounting method, cash, accrual, or other. Let me talk about the first two because number 3 you shouldn't even check. It's really going to be cash or accrual. Cash simply means that you count business income as cash actually comes in. Accrual means you count business income as invoices come in. So what that means is, in example A, if I'm a lawn care provider and Johnny pays me $300 after I invoice him, when I actually receive the $300 payment in my bank account, I record that as income, is the cash method. Some people use an accrual method where as soon as I invoice Johnny, I count that as income, even though the money he has not paid the invoice, or he may be on a 30-day net invoice. I'm still going to count that as income. So you just need to check which one you do. The most common type I see people do is cash. I mean, when the money hits the bank, that's when I count it as done. So did you materially participate in the operation of the business You want to check yes. If not, you're really going to limit yourself on how much you can claim in losses. As if you were in your business and you're a sole proprietor, or you're a single member LLC, or you're an independent contractor, of course you participated in your business. You're out there working. So that's all that means. You select yes. If you acquired this business during 2020, check here. Check that box. That's fine. Just check yes if you did. That's the purpose of us doing this Scheduled C for January and February of 2020. We're a new business. Did you make any payments that will require you to file 1099? Well, to answer this question is, if you paid an independent contractor, someone to do a service for you, and you paid them over $600 that year to do that service, then you have to select yes. If you paid someone to do a service for you under $600, then you're going to select no. And what I mean by that is, if you hired, if I'm a lawn care person and I had to hire someone to come and redo my plumbing at my office and do some repairs at the office, and he was like a handyman. He was just all around handyman, and I paid him $1,000. I'd have to file a 1099 on him because I paid him to do work, and he has to pay his taxes on that. If you pay an individual for any other type of service, not a business, but an individual that's doing independent contractor work for you, such as if you paid an independent bookkeeper, if you hired an individual, not a company, to do your bookkeeping, and you paid them money, they would be considered a 1099. So that's the definition of that. So if you had any of that happen to you, press yes, check that box. If not, select no. So let's move on. Gross receipts. So this is where you're going to put your top line revenue. So you're going to put how much you made without taking anything from it, without taking any inventory, without taking any deductions, just how much did you bring in, period. So you put that number here. And once you put that number in here, so let's just fill this out, the number part. Let's just say I made $19,786, okay? So then here on line 2, you get to put any returns or allowances. So did you have to refund a customer in any sort of way, or give away free product if you sell stuff, or give away free service because you had a customer service complaint? You would put any returns or any allowances here. So let's say we didn't have any allowances. Line 3, you're going to subtract 2 from 1. So if you had any allowances, it would be this number minus line 2. And so then we're going to just bring the number down here. Okay. And so then really quick, we're going to go to line 4, cost of goods sold. This is going to come from line 42, which is all the way at the bottom of this form. 42, cost of goods sold. And this is where you would, if you had inventory, if you were, let's say, a food business, and you had a restaurant you started, or a catering service you started, and you bought food inventory for that catering service, that is considered inventory cost of goods sold. So cost of food is cost of goods sold. You're going to have to fill this part 3 out, and we'll get back to that in a second. But pretty much once you fill that out, you're going to put your ending inventory from line 42 right here on line 4. For all of you who do not hold food inventory or any type of inventory, period, as far as resellable items, then you're going to leave this blank. 5, gross profit. All you're going to do is subtract line 4 from 3. So if you had cost of goods, it would let you subtract that out. But since we don't, we're going to bring our number down again because we don't have any cost of goods sold. 6, other income. You really don't want to mess with this unless you know what you're doing. Most people do not have other income. They don't have, sole proprietors, single member LLCs aren't going to have federal and state and gasoline fuel tax or refunds or any of this good stuff. If you do, you're going to have to go read the detailed instructions. It's a lot more complicated. But most people just have straightforward income. Then you're going to add lines 5 and 6. So we didn't have any of this special other income. So we're still going to bring our number down here. And that's how we're going to fill that out. Now we're in part 2, the expenses, the good stuff. What can we say we deducted? Now, before I start filling out expenses, I want you to understand something. This is the top line revenue. This is not what your PPP loan is going to be based upon. It's going to be based upon line 31. And what line 31 is going to do is going to take, after all your expenses here and your deduction for using your business in your house, if you did, It's going to take all of these expenses and deductions and say, take this number on line 7 minus the number on line 30, and then it's going to say that's your net income. Okay. So just know that line 31 is the line where your PPP loan will be calculated off of. So you want to make sure you're not going over the cap limit, because there is $100,000 limit on how much you can make as a sole proprietor, independent contractor, by yourself. You only have one employee. If that's you, then you can only make $100,000 on line 31 to get the PPP loan. You can't make over that. So reduce it to 100,000 if you're over it. Now, because we're doing January and February, we're only doing 2 months on this Schedule C. We're not doing the full year, because that's all they're looking for is 2 months. That means on this line, you cannot put more than $16,666. If you put more than $16,666 on this line, you need to reduce your gross receipts, or add more expenses to reduce the amount on line 31, because you won't qualify, because that will put you over $100K a year. So this line 31 has to fall under $16,666 to be eligible for PPP. Okay. Let's dive into expenses. Advertising, whatever you spend on advertising, car, truck expenses. Now, this one's a little tricky. If you use your vehicle for the business, you can qualify to take mileage and different expenses on there. And there's a more in-depth analysis on what you can take for car and truck. Commissions and fees that you paid for your business. Contract labor. Again, if you put anything here, that means you checked the yes box up here for paying someone, and you're going to have to file a 1099 on them. Depletion and depreciation. This is a very complicated thing to do if you're not an accountant. So if you didn't have any heavy equipment that you bought as a new business for January and February that you want to depreciate, I would leave this blank. But if you do want to use this, that will have to be another video, or you can message me, and you can also view the instructions on how to depreciate for IRS. They have an actual calculation tool that will help you do it. So let's move on to 14, employee benefit programs. You wouldn't have this because you're the only person working for yourself. That's why you're filling out the sole proprietorship form. Insurance and health. You would put any insurance here other than health. So anything else you pay, like car insurance for a car that you use for the business, insurance for property, casualty, for the office space you're renting, renter's insurance, whatever other type of insurance besides health. Interest, if you paid mortgage to your business owned location, or you work out of your house and you have to pay mortgage interest, a percentage of it could go to deduction on here. Legal and professional services, accountant, lawyer, a cleaning service, anyone that you paid as a business for services. Office expense can be rent, it can be office supplies, operation supplies, anything that had to deal with you running your office, basically. Telephone bills for business, whatever you need to put there. So you list all your expenses. Rent or lease, for vehicles is another uncommon one. This has to be a business vehicle, so you would want to go look at instructions for that. Repairs and maintenance supplies that are not included in Part 3. That means you can put all of your supply expenses here, but not inventory. So if you're a food place or you're someone that holds retail inventory, you're not going to put those expenses here. You're going to put them later on down the form. Tax and licenses, if you had to pay to incorporate, if you had to pay a business license to be in operation, you're going to put all those expenses here. Any taxes that you had to pay up front, travel for fuel, meals, any travel expense that you had and incurred while you were on the go for your business. Utilities, you can deduct a percentage of utilities from your home if a percentage of your home is used for the business. There is a cap on that, so you'd have to look that up. If you have office space, you can put your utilities here. Wages, you wouldn't have any here because you don't have any employees, so leave this line blank. You're just applying for yourself as a sole proprietor, single member, LLC, or independent contractor. Other expenses, we don't really touch this line item. All your expenses should be categorized here. If not, you're going to have to give an explanation as to what are these other expenses and why they don't fall in any of these categories. So this is a very uncommon line, 27A. Okay. So I'm going through this really quick. I know total expenses. So you're going to add up everything that you did here, put it here, and then you're going to subtract line 28 from 7, which is up here, and that's going to be your tentative net income. And the reason why it's tentative is because there's one more thing you can subtract, and that's if you have part of your house you use as your business and you want to do the deduction for that. And you're going to use the simple method. There's a calculator for the simple method to deduct your house, and it is on the IRS website. I believe it's capped at 300 feet of your home, $5 a foot. So you can put that calculation and that number here if you want to take that deduction. And then you're going to get to line 31. Again, line 31 cannot be over $16,666 for January and February of 2020. So if you say you started your business January 1st of 2020 or January 10th, and between January and February of 2020, you made more than $16,600, you need to reduce it, because then you're going to be making over $100K a year, and PPP will not loan you money if you made over $100K a year as a sole proprietor, independent contractor. So that's what we're going to do there. The cost of goods, I'm going to go through really quick. If you need help with this more in depth, you guys can message me. Check out my website at pyrexaccounting.com. That's PIREX accounting.com. Or I'm going to put all of my info in the description below. So you guys can message me directly and I'll help you personally fill this out. I've been helping all of my tax clients do just that. So the next thing is cost of goods is your inventory. Again, if you keep food or retail inventory, this is for you. You're going to have to put a beginning inventory here. If you didn't have any last year, then that number's 0. Then you're going to put purchases. Whatever you purchase, all your invoices from January to February, combine them. That's what you used as purchases. Then you're going to subtract out any labor that you paid someone else to manage or handle this inventory. Materials and supplies needed to hold this inventory, any other costs which are uncommon, and then you're going to add up lines 35 through 39 and get a total. Then you're going to count your ending inventory as of February. So you started with nothing in January because you're a new business. You purchased, let's say, $4,000 worth of product. And then at the end of February, you were left with $1,500 worth of product. Then you're going to say, hey, I purchased $3,000. I used everything but $1,500, and then that number is going to go here. So you're just going to subtract line 40 from 41, whatever your ending inventory is. So this is 3,000, and this is 1,000 left in ending. Then line 42 would be 2,000, and then you would bring that number back up to the top here, to line 4. And it would get subtracted from your gross income, because when you hold inventory, it does not count as income because you still have that product and it's still worth value on the shelf. You haven't sold it yet. Part 5 is information on your vehicle. Only complete this part if you're claiming car or truck expenses. Okay? And that's everything for the Schedule C.